Solved problems. Inventory valuation. Periodic inventory system. Perpetual inventory system. First in, first out. Last in, first out. Average cost and gross profit methods. And calculation of ending inventory cost. Problem. Steward Company beginning inventory and purchase during the year ended December 31, 2010 were as follows. January 1, inventory 1000 units, unit cost 50, total cost 50,000. March 10, purchases 1200, unit cost 52.50, total cost 63,000. June 25, sold 800 units. August 30, purchases 800 units at rate of 55 per unit, total cost 44,000. October 5, sold 1500 units. November 26, purchases 2000 units at the rate 56 per unit, total cost 112,000. December 31, sold 1000 units. Total units purchased 5000, total cost of purchase 269,000. Instructions. 1. Determine the cost of inventory on December 31, 2010 using the perpetual inventory system and each of the following inventory costing methods. A. First in, first out. B. Last in, first out. 2. Determine the cost of inventory on 31st December 2010 using the periodic inventory system and each of the following inventory costing methods. A. First in, first out. B. Last in, first out. C. Average cost. 3. Appendix. Assume that during the fiscal year ended December 31, 2010, sales were 290,000 and the estimated gross profit rate was 40%. Estimate the ending inventory at 31st December 2010 using the gross profit method. Solution. In the problem, it was asked to determine the cost of inventory on December 31, 2010 using perpetual inventory system, periodical inventory system under Fifo, Lifo, average cost and gross profit methods. It is required to work out the cost of closing stock as on 31st December and answer perpetual inventory system Fifo, perpetual inventory system Lifo, periodic inventory system Fifo, periodic inventory system Lifo, periodic inventory system average cost and gross profit methods. Let us work out on the above one by one with the details. Cost of the inventory under perpetual inventory system first in, first out method. Purchases, sale, closing stock. January 1, the beginning balance is 1000 units at the rate 50, amount 50,000. March 10, there is a purchase of 1200 units at the rate 50 to 50, amount 63,000. Now the closing stock is 1000 units at 50,000 and 1000 units at 52.50, 63,000. June 25, there is a sale of 800 units at the rate of 50, 40,000. It is applied from the first lot of purchase. So the balance quantity is 200 at the rate 50, 10,000, 1200 at the rate 52, 50, 63,000 is the closing stock. August 30, there is a purchase of 800 at 55 per unit, amounting to 44,000. Now the closing stock is 200 units at 50, 10,000, 1200 units at 50 to 50, 63,000, 800 units at 55, 44,000. October 5, there is a purchase of 1500 units. So this is from 200 units from the beginning balance at the rate 50, 10,000, 1200 units from the first purchase 50 to 50, 63,000, 100 units from the second purchase 55 at the rate, amounting to 5,500. Now the balance is 700 units from the second purchase are available at the rate 55, 38,500. November 26, there is again 2000 units purchased at the rate 56, amounting to 112,000. Now the closing balance is 700 units at 55, 38,500, 2000 units at 56, 112,000. December 31, there is a sale of 1000 units from 700 units at the rate 55, 38,500, 300 units at 56, 16,800. Now the closing stock is 1700 units at the rate 56, amounting to 95,200. Answer 1A. Cost of the inventory under perpetual inventory system first in first out method is 95,200. Cost of the inventory under perpetual inventory system last in first out method. Purchases, sale, closing stock. January 1. Beginning balance 1,000, 50,000. March 10. Purchase 1,200 units at the rate 52.50 amounting to 63,000. Now the closing stock is 1,000 units at 50,000 and 1,200 units at 52.50 63,000. January 25. There is a sale of 800. This sale is applied from the last purchase 50 to 50 42,000. Now the closing stock is 1,000 units at 50,000, 400 units at 50 to 50 21,000. In the August 30, 800 units were bought at the rate 55 amounting to 44,000. Now the closing stock is 1,000 units at 50,000, 400 units at 50 to 50 21,000 and this purchase 800 units at 55 44,000. In October 5, there is a sale of 1,500 units. 300 units go from 50 amounting to 15,000, 400 units from 50 to 50 21,000, 800 units at 55 44,000. Now the closing stock is 700 units from the beginning balance at the rate 50 35,000. November 26, there is a purchase of 2,000 units at 56 amounting to 112,000. Now the closing stock is 700 units at 50 35,000. 2,000 units this purchase at the rate 56 per unit 112,000. December 31, there is a sale of 1,000 units at the rate 56 last purchase amounting to 56,000. Now the closing stock is 700 units at 50 35,000, 1,000 units at 56,000. Now the closing stock is 91,000 and 1,700 units. Answer 1B. Cost of the inventory under perpetual inventory system last in first out method is 91,000. Cost of the inventory under periodic inventory system first in first out method. Opening balance plus purchases issued closing balance. Purchases January 1 1,000 at the rate 50,000. March 10 1,200 50 to 50 63,000. August 30 the purchase 800 55 per unit 44,000. November 26 purchase 2,000 units at the rate 56 amounting to 112,000. Total units bought 5,000 units amounting to 269,000. There is a sale of 3,300 units adjusted from the opening balance 1,000 units at 50,000, 1,200 units 50 to 50 63,000, 800 units at 55 44,000 and 300 units at the rate 56 16,800. Total issues total sale is 3,300 units at amounting to 173,800. There is a closing balance of 1,700 units from the November purchase at the rate 56 amounting to 95,200. Answer 2A. Cost of the inventory under periodic inventory system first in first out method is 95,200. Cost of the inventory under periodic inventory system last in first out method. Opening balance plus purchases issues closing balance. January 1 1,000 opening balance at the rate 50,000. March 10 purchase 1,200 at 50 to 50 63,000. August 30 800 units bought at the rate 55 44,000. November 26 2,000 units bought at 56 per unit 112,000. Total 5,000 units were bought at 269,000. There is a sale of 3,300 units adjusted from the last purchase, 2,000 units from the November purchase, 800 units from August purchase, 500 units from March purchase, amounting to 182,250. Now there is the balance remaining is 1,000 units at 50,000. Now March 10 700 units at the rate 50 to 50 36,750. Total inventory cost is 1,700 units at 86,750. Answer to B. Cost of the inventory under periodic inventory system last in first out method is 86,750. Cost of the inventory under periodic inventory system average cost method. Opening balance plus purchases issues closing balance. January 1 quantity Opening balance 1000 at 50,000. March 10, 1200. Bought at 52.50 per unit, 63,000 units. August 30, 800 at the rate 55, amounting to 44,000. November 26, 2000 at the rate 56, 112,000. Total 5,000 units were bought for an amount of 269,000. The average cost is 53.80 per unit. There is a sale of 3,300 units at the average cost 53.80, amounting to 177,540. Now the closing balance is 5,000 units minus 3,300, 1,700 units at the average cost 53.80 comes to 91,460. Answer 2C. Cost of the inventory and periodical inventory system average cost method is 91,460. Cost of the inventory under gross profit method. Gross profit method. Particulars, estimate, figures. Sales 100%, 290,000. Gross profit 40%, 116,000. Cost of goods sold 174,000. 290,000 minus 116,000, 174,000. Particulars amount. Beginning inventory 50,000. Purchases 219,000. Cost of goods available for sale 269,000 minus cost of goods 174,000. Estimated ending inventory 95,000. Answer 3. Cost of the inventory under gross profit method is 95,000. Summary. Cost of the inventory 31st December 2010. Method Lifo, Fifo. Perpetual Fifo 95,200. Periodical Fifo 95,200. Perpetual Lifo 91,000. Periodic Lifo 91,460. Gross profit 95,000. Recommendation. The company should adopt a Fifo method of inventory valuation either under perpetual or periodic system. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.